Welcome back. You're still tuned into Markets Today here on CNBC-TV18. Moving on to the fourth headline today. Metal stocks perk up in trade as signals of China looking to stimulate growth boosts demand outlook. Hindalco and Tata Steel close with minor gains. Manisha Gupta is here with more on this. Manisha.
Well, yes, it has been a firm day for the metal prices where we are looking at a 6-month highs in copper, a 1-month highs in zinc as well. And for the year as well, the beginning has been quite strong. You have 3.5% of gains coming for copper, nearly 6% up for zinc as well. This is because China has moved away from its zero COVID policy. It's opening its borders with Hong Kong, and the trade is expected to begin on a stronger side. Also, when you look at construction, infrastructure, households, China is injecting a lot of liquidity in all of these sectors. Apart from that, there is restocking ahead of the Lunar New Year holidays as well, and that has been supportive. Apart from China, it also has to do with a sharp decline in the US dollar index that we saw. Markets are anticipating a lower interest rate hike coming from the US Fed in its Fed policy. And it also has to do with elevated energy costs and rationing that has led to a lot of smelting decline in Europe and Africa. And then there has been a report from Goldman Sachs which says that commodities will continue to run up in 2023, perhaps giving a return as high as 40% there. And Morgan Stanley also says, and it joins actually with Goldman Sachs in suggesting that China will rebound, the reopening will lead to higher outlook in sense of economy, and China being the major producer and consumer for many of these metals, that's yet another push that the metal prices got from there. If you look at the LME stocks, they are the lowest in 25 years. We also have seen copper smelting lowest in 6 years in 2022. So on fundamentals as a factor as well, there's a lot of support coming in for a few of these metals there.
Okay, 40% upside to commodity prices. That's a big upside, right? Manisha, thank you so much for joining us with all those details. With that, let's move on to the fifth headline now. CNBC-TV18 News Break is confirmed. Axis Bank has revised its deal with Max Financial to acquire 7% additional stake in Max Life. It has confirmed, that is, the bank has confirmed, that the additional stake in Max Life will be acquired at a fair market value. Yash Jain is joining us with the details. Yash, you broke it first up and it's confirmed now. What has the banks really said in this one?
Well, that's correct, Sonal. So, as you said, let's just first look at what Axis Bank and Max Financial Services have disclosed to the exchanges. So, Axis Bank has said that they've entered into a revised agreement with Max Financial on January 9th. Now, the valuation as far as that balance 7% stake, which you also mentioned, is concerned, will now be done at fair market value, and that fair market value will be derived through the discounted cash flow mechanism. This is exactly what CNBC-TV18 on October 9th had reported, that the insurance regulator is going to ask Axis Bank and Max Financial Services to execute this transaction at a uniform price and at a fair market value. Now, this development is particularly positive for Max Financial Services, which is the parent company of Max Life Insurance, for 3 reasons. One is that now with this particular move, the uncertainties over the deal, they go out of the window, and the deal is, in all possibilities, is likely to go through. The second one is essentially Max Financial Services, because of the revision in the valuation, gets more value, more price for its stake, which it sells to Axis Bank and Max Life Insurance. The third one is that with Axis Bank coming in as a 20% entity, the uncertainties over the business of bank assurance, that also moves out of the window, and Axis Bank, essentially the OTC sale which Axis Bank gets, that also in that sense gets safeguarded, which essentially insulates the business from this particular partner moving out.
All right. Okay, Yash, thank you so much for joining us with all those details. So that's Axis Bank and Max Financials, which is in focus today. But one of the big gainers today, Tata Motors, raised 6% ahead as Jaguar Land Rover's strong sales growth raised expectations of better margins and higher cash flows as well. The auto major attributed the 15% growth to a gradual improvement in chip supply. Sonia Shenoy is standing by with all those details. Sonia.
Well, thanks a lot for that. Tata Motors is not only the biggest Nifty gainer today, but the gains that Tata Motors has seen is the largest single-day gain since May of 2022. Now, the reason is that the JLR wholesale numbers have been very strong. It's a 15% growth year-on-year. It's also a 6% growth on a quarter-on-quarter basis. And this is because the supply-side issues have eased for Tata Motors, and hence production has picked up, especially for its fast-moving vehicles. Now, Tata Motors said that they're sitting on a record order book of over 215,000 units, and a lot of brokerages brokerages have gone ahead and raised their target prices. In fact, CLSA has upgraded the stock to a buy. They have a target price of 512. They say that the improvement in the performance on the top line will result in better free cash flow generation for Tata Motors and help them achieve their guidance in FY24. Morgan Stanley says JLR will generate 400 million pounds of free cash flows, positive free cash flows in the year to come. In fact, if you look at the chart as well, this is the best wholesale number that we've seen in the last 4 quarters at least, and the trend has been moving on the upside. The stock is still a way off from its 52-week high though, but is one of the biggest Nifty gainers today. Back to you.
Yes, big gains on Tata Motors. But Sonia, stay with us. The other stock on our radar was the auto ancillary company, Sona BLW. They acquired a company today, around 54% stake in that company. Give us more details on this. What is the analysis and what it means for the company as well?
Well, Sona Comstar is up almost about 5% after acquiring a company called Novelic for 40.5 million euros. Now, Novelic is a Serbia-based company that is into manufacturing of wave radar sensors. They provide perception solutions. They provide full-stack embedded systems globally as well. Now, these sensors are used in electrification of vehicles, in autonomous vehicles, and this is a fast-moving, high-growth sector, and hence brokerages are very bullish on Sona Comstar. Now, this acquisition marks Sona's entry into the sensor and software segment, and the management expects this segment to potentially touch $100 million in the next 6-7 years in terms of revenues. Now, the acquisition will be funded through internal accruals and it will be EPS accretive from the first year itself. Nomura put out a note where they say that the growth opportunity is very good in this segment, in the sensor segment, as vehicles become electrified and autonomous vehicles pick up as well. They like the company's strategy to focus on high technology products. They maintain a buy with a target price of 609 on the stock.
All right, so that's all about the auto space. Sonia, thank you so much for bringing us all those details. Meanwhile, global engineering company Cyient subsidiary Cyient DLM has filed its DRHP with the market regulator for its proposed initial public offering. The IPO will include fresh equity of shares worth over 700 crore rupees. Reema Tendulkar is here with the details. Reema.
Thanks so much for that. So as you pointed out, Cyient's arm, that's the DLM business, design-led manufacturing, has filed for an IPO. It's filed the DRHP with SEBI. This is in line with the management's outlook to go ahead and list this business separately, unlock value. In fact, a subcommittee had also been formed a couple of months ago. Now, just before we get into the financials of DLM, what exactly is DLM? Now, Cyient does a lot of design for many of its clients. So, for instance, they have clients in aerospace, in the transportation vertical, railways, etc. Now, for instance, if they want to design a nose for an aircraft, right, the DLM business would also help them manufacture a prototype. So in that sense, Cyient, along with DLM, was not only designing it, but giving you a prototype by manufacturing it. So that was the, the synergy that Cyient was trying to derive from DLM business. But this was an acquired business. It was acquired by DLM in 2015 when they acquired Rangson's Electronics, but now they are looking to divest it. And because this is a manufacturing business, its margins are lower than the margins this IT services company like Cyient Services would enjoy. The details which have been shared on DLM, the IPO will have a fresh issue of 740 crores and the company will consider a further issue of equity up to 148 crores. About the financials of DLM's, this year the company was targeting a high single-digit revenue growth in DLM. Last year, the company's DLM business had revenues of $105 million with margins of 7.2%, about 15% of Cyient's overall revenues. This is incrementally positive for Cyient because one, it unlocks shareholder value, and it also helps the company to focus more on the DLM business and scale it up. Back to you.
Reema, thank you so much for explaining that to us. So all those stocks in focus and the market wrap for you today as well. And with that, we'll take your leave on this edition of Markets Today. Thank you for watching.